Welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for October 31st, 2009. Our website is blog.accendotraders.com, where we put together effective video technical analysis trading plans on a daily basis. Our focus here at Accendo Traders are trading plans. We want you to be a disciplined trader. We want you to be aware of what's coming down the market pipe that can affect your trades. But more importantly, by being a discipline, by creating a trading plan, you're going to have time to spend with your family. So when we look at the week that was, booyah, we ended down. The market closed sharply lower this week as the dollar rallied. All of our major sectors ended down, and we were led by materials and financials. So the question is this just a healthy pullback to the 50 moving average, or is this a lookout below moment? We hit our 10,000 target, and what's going to happen from here? Are we going to make a swing high, another swing high, or are we, again, about to start making some lower lows and lower highs? So as I just said, the biggest catalyst of this week was the dollar. If you look at the chart of the dollar, it was a direct inverse of the major indices. I actually this week put the dollar on Thinkorswim, its /DX chart on my market internals as I'm looking at the advance and decline, looking at excuse me, the NYSE volume. I also included the DX, just to see what it was doing compared to what the market was doing intraday. Then on Thursday we had the better than expected third quarter GDP numbers, 3.5 versus 3.2. And anybody knows it takes two negative numbers to say recession, but only one to get out. So that's interesting. Shouldn't it be at least two to get out of recession? But on Friday, once again, we had personal income spending come a little bit lower than expected, and the market went down. Now, again, notice I don't really have a lot of economic data there. But this week was really driven by the dollar. When a market doesn't have a catalyst, it makes one. A couple years ago, I remember it was oil. The price of oil. If oil was up, the market was down. And right now, it's using the dollar. If the dollar's down, the market's up. If the dollar's up, the market is down. We need a weak dollar for our companies with the imports and exports going across the water. So this week, when we're looking for, do we have anything that can be a catalyst versus the dollar? And we do on Wednesday have ADP. Last month, the market did move off ADP. It was a good correlation, and the market did move down off of this. And then on Friday, we have the non-farm payroll numbers. Certainly can move the market. Pending home sales on Monday. Couldn't. I think that might be tied into the dollar. So tomorrow we don't have much. Pending home sales maybe. Forward and lows before the market. I'm really looking at MasterCard, Ralph Lauren, Baker Hughes, and Prudential's. But MasterCard, I believe that's on Tuesday. Nothing much on our splits front. So again, we always talk about on our videos, what's going to be the catalyst? What's going to move the market? What will the traders use as their catalyst? Earnings, as you can see, not much of what's going on. I mean, I usually have several things going on there. We didn't talk about anything with earnings for this past week. And you can see what's coming on this week. So what about economic releases? Well, we said ADP and non-farm payroll, but what's really going to happen on Monday and Tuesday? Will the dollar once again be our catalyst? Let's go ahead and take a look at our charts. So we like to start off with the daily chart, and we've got the Dow Jones here. And you can see we tested the 20 new high, tested the 20 new high. Wait a minute, came down, tested the 50, made a new high. And here we are back down in the 50 again. What are we going to do? Is this just a healthy pullback? Well, we're going to take a look at some of the internals to see what that's suggesting. But you can see one thing about this is that on this run up here, look at the volume. It's kind of light. And as we started to consolidate and come down, what did the volume do? Volume picked up, and look at Friday's action. So volume is telling us one thing. Let's go ahead and look at the NASDAQ. Remember, the NASDAQ led us all the way up. And then what happened? We had a very distinct new high on the Dow. See how our swing high is very distinct. But on the NASDAQ, it was not. It was almost parallel, equal. And then the NASDAQ has already broken the 50 twice. And now we've closed below. With the S&P 500. Same thing, a very distinct swing high, and our volume picked up on our push lower, and the S&P is already below the 50 moving average. Now let's go ahead and switch over to our monthly chart to see what that's showing us. Now what we talked about before was the power of this 20 moving average, and we said that we were so close to the 50, this almost counts as an air kiss of the 50 moving average. And now where are we? We're back below the 20 moving average. So we're almost having a failure here. And that's certainly not good. Now what was somewhat good on our monthly chart was that on the Dow, on this whole push up, the volume died down. But when we finally had a good month, October, where we went up, you can see we finally had an uptick on volume. In November, we're seeing even more volume. So what this kind of telling us is what? Over the summer, when we had this big move up, especially in March, we had good volume, but as the summer months came, we lost our volume, still went up, but now as traders are coming back from their summer holidays and we're getting more volume, we're starting to pull back some more, so that's certainly concerning. NASDAQ, we're at the 50 and we never really closed above it, and also again showing weakness, already having a red candle here on the NASDAQ on the monthly, and here we are, same as the Dow with the S&P 500. So again, this 20 moving average we've been talking about for a month is turning out to be a much stronger resistance than probably thought, especially at the beginning of October. So November starts, the new candle starts Monday. So what we have here is September and October, and we broke through it, and this is an upside down hammer, inverted hammer. Again, that's also bearish. I also just wanted to take a quick look at the long-term moving averages since we are pulling back. You can see we still have plenty of room to get to the 100 on the Dow. Same thing here on the S&P 500. But one thing that's interesting, and I think we talked about this before, is look at the 500 moving average. And here the NASDAQ bounced here as it went up to make this slight swing high. And here, where did we bounce here as we broke the 50? Maybe the 50 is up here. So this 500 moving average is acting as a little bit of support. So that's what the charts say, but what's going on in the inside? And the one thing that we can certainly say over the past couple of weeks is that we're seeing what? More red. And not only just more red, but more red on the breadth. These two lines here in the middle are the breadth, which is a measure of the up and down volume on the NYSE. So what's important about this is we have our first week where we have 4 negative breadth. Not only do we have negative breadth, but they're down very low. Anything below 50 is considered negative breadth. And the other thing is we had the big on Monday. Volume increased. Volume on Tuesday. Volume increased on Wednesday. And on our big move up on Thursday, what happened? Volume died. Now, still strong, but it was still not as good as the down days. And then again, of course, you can see Fridays was a huge increase on volume compared to Thursday. The other thing I want you to notice is if you can see this line right here, this is the NYSE new highs and new lows, and the NASDAQ new highs and new lows. And look over here, 300, 200. Even when we were consolidating, 400 new highs. That means at some point in the day, that many stocks made a new high in a day. 200, 200. 160, big numbers, and look at the new lows, single digit. And then what happened this week? Well, okay, Monday 140, okay, all right. What? 65, 32, 30. Notice that stocks are no longer making new highs. And on the NASDAQ, not only do we have lower numbers, and again, NASDAQ kind of led us. The NASDAQ new highs started shrinking last week. But on the NASDAQ, we actually have days, Wednesday, Thursday, and Friday, where we had more stocks making new lows than new highs. Again, what is that saying to you? Okay, because I want to emphasize the charts and the internals, we don't have time for our educational portion of our video. I do want to point out our partners, Live Professional Trading Advice. This is a trading chat room, basically a futures chat room. They got a great 10-day trial access for $29. I'm in there. I follow this room. It is great. I highly recommend it. And also, we worked out a great deal with a futures broker Intraday E-mini as low as $300 per contract. And more importantly, if you register through us, you get 20 free contract trades. So certainly want to point that out. If you want to download our podcast, we are going to start putting up a free daily podcast up there. So go ahead and register there. You can follow us on Twitter. And we have a good series going on about how to get started trading, specifically futures. So you come to our YouTube channel and find out how to get started trading futures. Thanks, guys, and I will see you next time.